Fear came back into the market in a very big way.
What we know now is Wall Street can bring down Main Street.
People are seeing this, and those memories of fear are coming back.
When you have a 401k or a 403b, those kinds of accounts, they are incredibly susceptible to downturns.
The Dow Jones Industrial Average dropped more than 900 points. More than 900 points.
There are questions about how to best save for retirement.
Part of the problem is confusion.
Time keeps on slipping into the future.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are.
When the market goes up, you go up. When the market goes down, you don't go down. Safe Money Radio, your money safe and sound.
Welcome to Safe Money Radio with your host, Brad Pistole. Brad is a retirement and income specialist, primarily serving Springfield, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Pistole is a licensed life insurance professional in the states of Missouri, Arkansas, and Kansas, and he specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies.
Safe Money Radio, your money safe and sound.
And now, here to talk with you about securing your retirement, your host, Brad Pistole.
Well, friends, here we are, staring 2024 right in the face. Are you ready for the many different things that 2024 will bring your way? Well, as it always is, ready or not, you better buckle your seatbelts. Because I can assure you of this, if you think 2020 made your head spin, mark my words, that won't hold a candle to what's going to happen in 2024. Now, how do I know this? Because I don't live with my head in the sand. I've been saying this for many years. I'm not on Facebook or Instagram or Tweety Bird or any of the other mind-numbing, life-wasting websites that people are addicted to. And that means I have the time to pay attention to what's going on around me. And trust me on this. If you think you saw questionable things take place in 2020, just get ready. Because the election year has arrived, and the world will get turned on its head multiple times in many different ways. And one of the many things that will be affected by all of this madness will be your retirement accounts. At the time I recorded this show, our national debt is close to $34 trillion. And our total U.S. debt is more than $103 trillion. Now, can you even begin to fathom these numbers? You see, I don't think 99.999% of all people can. But what this means is this. When you consider the Social Security liability, the Medicare liability, and the United States unfunded liabilities, it ends up being an estimated liability per citizen of more than $630,000. If you don't believe me, just go to www.usdebtclock.org and try to wrap your head around what you're looking at. Friends, I've been hosting Safe Money Radio and the Retirement Income Podcast for more than 14 years now, and I try my best to cover a wide range of retirement planning topics. Now, some of them may not be as fun as others, like talking about taxes, but I can assure you of this. You need to know the things that we discuss on the show, because you will face these topics in the future, and the more you know, the better off you'll be. Today, I want to talk to you about something very few financial professionals know anything about. And one reason for this is because the topic can be very confusing. But the other reason is because most financial professionals focus on sales. They don't want to spend their time focusing on things that involve the distribution of assets from the accounts that are paying them their commissions and their salaries. Most professionals want you to keep your money in your accounts because they're paid a percentage of assets under management. But trust me on this, when you get near retirement, you won't be as focused on the growth of your accounts. Your focus will shift to the amount of income you can take from those accounts and the amount of taxes you have to pay on those distributions. Well, sure, during your working years, it's all about contributing money to your accounts. But when you retire, it's all about taking distributions from your accounts. And you want to do this in the most tax-efficient way possible. Remember, it's not what you make, it's what you keep after taxes that matters once you retire. Our podcast is listened to by people all across the United States, and the number one and number two issues I get asked by every listener involves these two things: income and taxes. Everyone wants to learn how to secure the highest guaranteed lifetime income they possibly can, and they want to learn how to pay the least amount of taxes possible on those distributions. And that's exactly what we teach people how to do on the show. You see, both my son, Hunter, and I are RICPs. That stands for Retirement Income Certified Professionals. This is a financial designation offered through the American College of Financial Services, and it's one of the most sought-after certifications in the financial services industry. And when it comes to your retirement income plan, make sure you're working with a Retirement Income Certified Professional who is also a certified financial fiduciary. This special designation was created by the National Association of Certified Financial Fiduciaries, and I've been associated with the NACFF for many years. Friends, if you'd like a copy of my number one best-selling book that will show you how to get rid of the tax tumors that exist inside your retirement accounts, all you have to do is give us a call, 866-780-SAFE. That's 866-780-7233. Just ask for a copy, and I'll give you one absolutely free. You can also request a free financial consultation. When we meet, I'll look at your current plan and make sure you aren't making Uncle Sam one of your primary beneficiaries for your accounts. You see, the majority of people are guilty of doing this, and they don't even know it. Don't let this happen to you. On the rest of today's show, I'll show you how to leave Uncle Sam on the bench when you take distributions from your tax-deferred accounts, so stay with us. Our number again is 866-780-7233. So just call and ask for our free information. My information will even show you how you can get up to a 15% cash value bonus when you roll over your account from risk to safety. Now, how big of a difference would a 15% day one increase in the value of your retirement accounts make in your life? Our number again is 866-780-7233, and there's someone standing by right now to take your call. Well, I must take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Do you own an annuity? Do you understand what it does, how it works, and if it's right for your retirement plan? Some annuities have fees that might not be justified by their benefits. Some annuities are exposed to significant market risk. Worse yet, if an annuity was sold without proper planning, it can cause unintended consequences for your retirement. If you own an annuity, it's probably a good idea to find out more about how it works and if it's right for you. It's time to give Brad Pistole a call now at 866-780-SAFE. That's 866-780-7233. Brad will help you review the features and benefits of annuities you currently own without any obligation. Once again, you can call Brad now at 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a certified financial fiduciary and a safe money retirement specialist. Now, friends, before the break, I told you I was going to share critical retirement planning information with you that very few advisors ever talk about. So let's jump right in. Recent tax law changes have made the QCD, which is known as Qualified Charitable Distributions, more valuable than ever before, especially for those of you who will now be taking the standard deduction. Now, as most of you know, if you take the standard deduction, this basically eliminated the tax deduction for charitable gifts, unless they were large enough to still itemize deductions. So using a qualified charitable distribution, known as a QCD, to satisfy your RMDs will help you avoid paying taxes on those distributions. This is a big, big tax savings move. QCDs effectively will add to the standard deduction or existing charitable deduction if itemizing by allowing the donations made from an IRA to be excluded from income, which lowers your AGI. Since many of you may not have enough charitable, medical, or other remaining deductions that survived the recent tax reform, enabling you to itemize, you'll be using the standard deduction. The QCD can actually add to the standard deduction, resulting in basically getting the standard deduction plus the charitable deduction. Now, here's why this is so important. Stay with me. Don't let your head spin. I know it's some crazy stuff. The Secure Act changed the age for the required minimum distribution, known as an RMD, from age 70.5 to 72. And then it changed again to age 73 under the Secure Act 2.0. But the QCD age for qualified charitable distributions didn't change. It's still at 70.5. And here's why this is important. QCDs can be made even before your RMD begins. The donation must be made directly from the IRA to the charity, and nothing can be received in return for the donation. Gifts to donor-advised funds or private foundations don't qualify. Now, the per-year limit is $100,000 per person, but this has now been adjusted for inflation. So beginning in 2024, the $100,000 limit will be subject to inflation increases, and for the first time in the history of QCDs, the limit has now increased to $105,000 per person. A tax deduction for the contribution can't be taken, but the amount transferred from the IRA is excluded from income, and it counts towards satisfying your RMD. You see, excluding that amount from income is a better tax benefit than receiving a tax deduction because it keeps your income lower. This allows more AGI-based tax benefits, resulting in lower taxes. Now, listen closely. QCDs can help reduce the value of traditional taxable IRA funds that are being left to your heirs. And especially since most beneficiaries will have to withdraw and pay taxes on the inherited IRA funds within 10 years after death, this is a big deal. It's better tax-wise to do charitable giving with taxable IRA funds through use of a qualified charitable distribution because they're removed from the IRA tax-free. So just think about this. When you use a QCD effectively, you leave Uncle Sam on the bench completely. Remember, you get a tax deduction for making the contribution to a tax-deferred account when you make it. And then when you use a QCD, you don't pay any taxes on the distribution. You win and Uncle Sam loses. Now, if you aren't making use of QCDs, you are missing out on a major tax planning weapon. Make sure you're working with a financial professional who knows how to maximize all of the arrows in your retirement planning quiver. Now, if you're like most people, your head is probably spinning right now with all that information, and I realize I can talk through all these tax planning and retirement income distribution rules pretty quickly, and that's okay. It should be confusing. Congress doesn't make tax planning and retirement planning income easy. They hope you and your advisor don't know these special rules, because if you don't, guess who wins? That's right, Uncle Sam. If you don't know how to maximize your tax-free distributions, you will turn them into taxable distributions, and that's just more money in Uncle Sam's pocket. That's why we have a podcast of all of our shows. If you're listening right now on the radio and you feel like you need to pause and rewind and replay, you can do exactly that. Just look for Brad Pistole and the Safe Money Radio podcast on YouTube, Spotify, or Apple Podcast. Go and subscribe, and then you'll never have to miss an episode. And trust me on this, your current advisor does not want you to listen to this or have this information, because you'll start to wonder, why hasn't my current advisor ever talked to me about any of the things Brad's talking about on his show? You can listen to the podcast 24/7, and if you like to learn visually, we have dozens of key interviews on YouTube with retirement planning experts like America's IRA expert Ed Slott, world-renowned economist Tom Hegna, National Social Security expert Heather Schreiber, and people with their PhDs in economics like Dr. Wade Pfau and Dr. Michael Finke. So don't miss an episode. Just go to YouTube and type in Brad Pistole. And if you're listening right now and you want to work with retirement income certified professionals, you're listening to the right show. I'm also a certified financial fiduciary, and I've won all kinds of national awards for the types of income and tax planning I've done with clients all across the country. Just give us a call anytime at 866-780-SAFE. That's 866-780-7233. When you call, ask for a copy of my Safe Money Kit that will show you how to keep your money protected from unnecessary taxes, fees, and losses. You see, these three things are what I call the triple whammy, and they will wipe you out in retirement. We will show you how to avoid unnecessary taxes, fees, and losses. My information will show you how to take your retirement accounts and use them to guarantee lifetime income that you and your spouse can never outlive. I will even show you how you can get up to a 15% day one cash value bonus added to your account the day you open the account. So, in other words, if you roll over $100,000, your day one value would increase to $115,000, and this new value would be 100% protected from losses and fees. Would a 15% increase to your retirement accounts make a big difference for your financial future? I'll show you exactly how to do this. Just give us a call at 866-780-7233 and ask for a free financial consultation. When we meet, I'll give you a copy of my #1 best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, and I'll give it to you absolutely free. Our number again is 866-780-7233, and there's someone standing by right now to take your call. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
Have you recently changed jobs and now you have a 401k or another retirement account you don't want to expose to the risk of market loss? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not ensure your old account provides you principal protection, the opportunity to participate in the market with locked-in accumulation, and a guaranteed lifetime income? We can help you roll over the retirement account from your previous employer and identify products that provide the potential of index-linked credited interest while limiting market risk. Did you know that if you're age 59 and a half, you may be able to use money out of your employer's plan even if you're still working there? Call us now and ask about bonus options on your retirement money with a fixed indexed annuity. Imagine putting your money on an elevator that only goes up. It might stop on a few floors on the way up when the market index goes down, but you won't go back to visit the lower floors. Our phone number is 866-780-SAFE. That's 866-780-7233. You can get your complimentary copy of Brad's best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, by calling us now. That number is 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Friends, on today's show, we've been talking about critical tax planning techniques that you can use to beat Uncle Sam at his own game. And I'll tell you why 99% of all financial advisors never talk about them to their clients. One of the key distribution options that you have at your disposal is something called a QCD. This stands for Qualified Charitable Distribution. And while many of you have probably heard about QCDs, which is not to be confused with RMDs, there's a pretty good chance that you don't know what I'm about to share, and not doing this can blow up the entire purpose of the QCD. So keep listening. America's IRA expert, Ed Slott, spends a lot of time talking to retirees about QCDs. And he talks about the mistakes a lot of financial professionals make with their clients regarding them. Now, as I've said, QCD stands for Qualified Charitable Distribution. And for many of you, it is a critical piece in your retirement puzzle that's missing. And your advisor has probably never talked to you about it. Just listen to what Ed recently said about qualified charitable distributions. The problem with qualified charitable distributions is that most people do them at the end of the year because that's when they're in a gift-giving mode, like in December. But they really should be done early in the year. I always say January is the new December. Remember, most people since the Tax Cuts and Jobs Act of 2017 don't get any benefit for the donations they make because most people use the standard deduction now. The QCD gives people an opportunity to get a great tax benefit for the donations they make if they qualify for QCDs. It's only for IRA owners or beneficiaries who are 70 and a half or older. If advisors have a client that's subject to RMDs, they may want to offset the income by doing a QCD. I never say give to charity to reduce your tax bill. I always say if you're giving anyway, do it this way to cut your tax bill. Now, Ed Slott goes on to give an example, and he says, an advisor may have a client with a $5,000 RMD this year, but they normally give $5,000 to charity. Do the QCD early. The first distributions out should be the QCD. If you do the QCD early, then you don't even have to take an RMD. It completely offsets it. But if you took the RMD first, then you can't offset that income because there's a first dollars out rule. Now, friends, this is very important, and this is where America's IRA expert Ed Slott says so many advisors are causing problems for their clients because they don't know what they don't know. So listen closely. The first dollars that come out of an IRA each year are considered the RMD distribution, and those distributions are taxable no matter what. Let me explain this further. This is called the first dollars out rule. So when planning a QCD, you simply cannot make the mistake of overlooking the impact of the first dollars that come out of your IRA. Once an IRA is subject to RMDs, the first dollars withdrawn during each year are deemed to be the RMD. One of the key benefits of the QCD is that it can count toward the required minimum distribution, which excludes that from taxation. Once an RMD is taken, that income cannot be offset with a future QCD. So let me repeat this. This is very important. Once an RMD is taken, which is the first dollars out of the IRA each year, that income cannot be offset with a future QCD. Now, I'm sure most of you probably think your current advisor is up to date on all the distribution rules, but I can tell you what we learn every single day. They aren't. We meet people every single day that we talk to all across the country, and their advisor has told them to do something that they shouldn't have done. This is why Ed Slott says, if you are charitably inclined, the QCD should be completed as early in the year as possible. This will reduce the possibility of anyone missing their chance to offset RMD income with a QCD, or the chance that one might be forced to take additional dollars later in the year. Don't make the mistake of assuming your advisor knows how to effectively do a QCD to satisfy an RMD. Don't assume that they know the first dollars out rule. Most of them don't. And you can't correct this mistake once the distribution has been taken from your IRA. Don't forget, taxable income affects your annual Medicare premium amounts, and it affects the taxes you pay on your Social Security distributions. This can result in thousands of dollars of unnecessary taxes every single year. Friends, if you are not maximizing this estate planning tool, you're paying unnecessary taxes. And when you pay unnecessary taxes, you make Uncle Sam the primary beneficiary of your retirement accounts. Do you get that? Does it make sense? Now, I'm sure you expect to make your spouse, your children, or your grandchildren your primary beneficiaries, and it may even say that on your distribution form. However, if you pay unnecessary taxes while you're alive, and then your heirs pay unnecessary taxes on the inheritance you leave them because you didn't set up your distributions correctly, You're giving your money to Uncle Sam instead of to your heirs. And in many cases, Uncle Sam becomes the primary beneficiary of your accounts. Don't let this happen to you. Make sure you're working with a retirement income certified professional who knows how to protect your assets from losses, fees, and unnecessary taxation. If you want to learn more about what we've talked about on today's show, give us a call anytime at 866-780-SAFE. That's 866-780-7233. When you call, ask for a copy of my Safe Money Kit that will show you how to keep your money protected from unnecessary taxes, unnecessary fees, and unnecessary losses. These three things are what I call the triple whammy, and they will wipe you out in retirement. We'll show you how to avoid this. My information will also show you how to take your retirement accounts and use them to guarantee lifetime income that you and your spouse can never outlive. I'll even show you how you can get up to a 15% day one cash value bonus that will be added to your account the day you open the account. So in other words, if you roll over $100,000, your day one value would be $115,000. If you rolled over $1 million, your day one value would be $1,150,000. And that new value will be protected from losses and fees. Friends, would a 15% increase to your retirement accounts make a big difference in your financial future? I'll show you exactly how to do this, and I'll show you why I've been doing this for my own retirement planning for the past 15 years. When we meet, I'll give you a copy of my #1 best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, with the foreword by America's IRA expert, Ed Slott. Our number again is 866-780-7233, and there's someone standing by right now to take your call. Since I have to take a break, now would be a great time to call me for a complimentary copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. And I'll also give you a copy of my Safe Money Kit. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
Business owners, some of you have worked 20 and even 30 years to build your business. You're ready to sell this asset and go into retirement. You don't want to risk or lose any of your hard-earned money. Property owners, have you just sold your property and need to turn that money into lifetime income? How about 401k participants? Have you recently changed jobs or reached age 59 and a half and have a retirement account that you don't want to expose to market loss? If you have money you're counting on for retirement, we can ensure that you sleep at night with our income and wealth preservation planning. Don't gamble your life's work away if you are nearing or in retirement. Take some chips off the table and do something to take the stress out of retirement. Call 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Thank you for tuning in to Safe Money Radio. I am Brad Pistole, a market risk mitigation specialist helping clients with retirement money preservation and income planning. In June of 2023, an incredible article was posted by Cyrus Bamji for Retirement Daily. Now, those of you who have listened to me on the show for very long know that I've been a guest contributor to Retirement Daily for many years, and I've even been interviewed by Robert Powell for articles that I've written for them. But today, I want to share some of this article with you. But before I do, let me tell you about the author. Cyrus Bamji is the Chief Communications Officer with the Alliance for Lifetime Income. Now, this is a nonprofit consumer organization that educates consumers about how to protect their retirement. He is passionate and committed, making sure that no American ever has to face the prospect of running out of money in retirement. Now, buckle your seatbelts because this information is critically important to the success of your retirement income plan. Now, to begin, Cyrus talks about a very important milestone that we will reach in the United States in 2024. They are calling this Peak 65. Now, what does this mean? Well, it means that 4 million Americans will turn 65 in 2024, and this will be the largest number of people to turn 65 in any one year in our nation's history. So to begin the article, Cyrus says, as Peak 65 approaches, many Americans are flying without a net. As the U.S. experiences a historic demographic milestone, millions of Americans are facing retirement without a secure income. Here's what you need to know about the perfect storm of retirement insecurity and what you can do to protect yourself. Now, did you hear what I just said? 4 million Americans will turn 65 in 2024, and it's estimated that a large number of them will do so without protected retirement income. Are you over the age of 65? Or will you be turning 65 in the near future, like 4 million people will in 2024? Will you have guaranteed lifetime pension from your career? Because if you do, congratulations, you'll be in very rare company in today's world. Pensions are a thing of the past, and because of this, it has never been more important than it is right now to secure guaranteed lifetime income. So stay with us today because that's exactly what we're going to be talking about on this episode of Safe Money Radio. If you've been listening to the show or to this podcast for any amount of time, you know that I'm a certified financial fiduciary and I am a retirement income certified professional through the American College of Financial Services. And I have spent my entire financial planning career helping retirees and pre-retirees keep their money safe. Safe Money Radio is the longest-running financial planning show in the Ozarks, and there is a reason I was named one of the Springfield Business Journal's Trusted Advisors of the Year. You see, I do what I say I'm going to do. I help people create guaranteed retirement income plans that pay them guaranteed lifetime income for the rest of their lives, no matter how long they live. And this can only happen when you insure your retirement against stock market losses and other types of accounts that fluctuate up and down like a roller coaster. The accounts that we use protect you from losses and fees. I talk about all of this in my national best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. If you would like to read a copy of this book, I'll give you a copy absolutely free. Just call us anytime at 866-780-SAFE. That's 866-780-7233. Call and schedule a free financial consultation. When we meet, I'll give you a copy of this book, and I'll give you a copy of my Safe Money Kit that explains exactly how these retirement income plans work. You'll find out why people like America's IRA expert Ed Slott and world-renowned economist Tom Hegna use accounts like this for their own retirement income plans. So just call us at 866-780-7233. And don't forget to subscribe to the Safe Money Radio podcast with Brad Pistole. Then you can listen to our shows and our interviews with world-class economists at any time. Just go to YouTube and type in Brad Pistole. You can find our podcast and all of our retirement planning information there. Our number again is 866-780-7233, and there's someone standing by right now to take your call. Well, I must take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Are you concerned about long-term care? You're also probably concerned about paying the high cost of long-term care coverage and increasing rates. Some long-term care rates have increased by as much as 40%. Thanks to recent changes made by Congress, you may be able to use non-qualified tax-deferred retirement money to pay for your long-term care tax-free. Some hybrid long-term care annuities or life insurance solutions can even double or triple your funds available for care. If you have non-critical health issues, you should still call us. Some insurance products have simplified underwriting, and a simple telephone interview will determine your qualification. Call us now if you want information on this opportunity to use tax-free money to pay for your long-term care. Our phone number is 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a certified financial fiduciary and a safe money retirement specialist. Today we're talking about recent research that was shared by Cyrus Bamji in a Retirement Daily article in June of 2023. Now this is part of what he shared with the readers. In 2024, our country will experience a historic demographic milestone called Peak 65. That's when the U.S. will watch more Americans turn the traditional retirement age of 65 than at any other time in history. It's estimated that 4 million people will turn age 65 in the United States in 2024. Most of these retirees will be relying on Social Security to provide more than 50% of their retirement income. And for many people, Social Security will provide 100% of their retirement income. Why? Because most Americans will not have the benefit of protected income from a pension, and that's there to help fill in the gap in lifetime income that's left by Social Security. And if you don't have a pension, then you have to have an annuity. Those are the only 3 types of guaranteed lifetime income. During Peak 65 next year, more than 12,000 Americans will turn age 65 every day. And unfortunately, half of these Peak 65 Americans have $100,000 or less in investable assets, according to newly released 2023 Protected Retirement Income and Planning Studies, known as PRIP, from the Alliance for Lifetime Income. At best, many of them won't be able to maintain the lifestyle that they want in retirement, and many people will face the prospect of outliving their savings. And you know what this means. Many people will be forced to come out of retirement and re-enter the workforce in order to make it and survive financially. According to the author, there are 4 major things that have created the perfect storm for retirement insecurity. Number 1 is the fact that Americans are living longer. Despite the rare dip in life expectancy that happened in 2021, thanks to changes in lifestyle, medical advances, and other factors, life expectancy in the U.S. has been on the rise for decades. And this increased longevity means our money has to live longer also. That's why guaranteed income is so important. Number 2 is ongoing market volatility, coupled with high inflation and fears of a recession. Recent market volatility, like the crash of the stock market in 2022, has significantly reduced the value of people's retirement savings, while undermining their confidence in their ability to retire on time. This is especially true for those who will be turning 65 soon, or for those who turned 65 in 2022 when the market started crashing. According to Fidelity, the average 401k suffered a 20% drop in 2022, and it is estimated that as high as 70% of consumers are worried about the volatile markets, like the stock market, and how they are reducing their potential to achieve the retirement income they will need for the future. Number 3 is rekindled fears about the future of Social Security. Recent data shows that only 1 in 5 Americans, or 20%, are confident in the overall solvency of Social Security, and they fear it may not last the duration of their retirement. This is a truly terrifying fear for those who rely on Social Security for more than 50% of their income. And finally, the 4th storm that is creating income insecurity in retirement is the fact that fewer than 50% of Americans aged 61 to 65 have protected income from a pension or an annuity. So it's not surprising that only 50% of all retirees believe their retirement savings will last the rest of their life. That's because they don't have pensions or guaranteed lifetime income from an annuity to fall back on. They are relying solely on Social Security for their income. Now here's some good news, especially to someone like me who has been educating people all over the country since the financial meltdown of 2008 about the importance of using things like certain types of annuities to guarantee a portion of your future lifetime income. In 2023, it has become blatantly obvious that a much higher number of consumers and financial advisors have changed their approach to retirement planning. The shift has started to move from investing to securing retirement income. 32% of consumers made changes to their investments in 2022 during the market crash, moving to safer investments and greater protection. And according to the author of this article that we've been talking about today in Retirement Daily, an overwhelming 93% of consumers who protected their portfolio with an annuity are happy with their investment choices and have significantly more positive outlooks about their future and their retirement prospects. So now, more than ever before, what used to be a bad word has now become the go-to account for retirees. Many advisors are recommending annuities to people to build protected retirement portfolios, and this has increased from 44% to 51% in 2022. It's no surprise that the demand for protected income from annuities has skyrocketed to an all-time high. Just listen to these numbers. In 2022, consumers purchased a record $312 billion in annuities. That's billion with a B. And why did they do this? Because the right type of annuities, especially those with guaranteed lifetime income benefit riders, are one of the only ways to guarantee the success of your retirement. This is exactly why I personally own 6 annuities in my own portfolio, and it's why I've structured more than 1,000 annuities for clients all across the country. If you've been listening to the show or the podcast Safe Money Radio for any amount of time, you know that I'm a certified financial fiduciary and I am a retirement income certified professional through the American College of Financial Services. And I've spent my entire financial planning career helping retirees and pre-retirees keep their money safe. Safe Money Radio is the longest-running financial planning show in the Ozarks, and there is a reason I was named one of the Springfield Business Journal's Trusted Advisors of the Year. I do what I say I'm going to do. I help people create guaranteed retirement income plans that pay them lifetime income for the rest of their lives, no matter how long they live. And this can only happen when you insure your retirement against stock market losses and other types of accounts that fluctuate up and down like a roller coaster. The accounts that we use protect you from losses and fees, and I talk about all of this in my national best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. If you would like to read a copy of this book, I'll give you a copy absolutely free. Just call us anytime at 866-780-SAFE. That's 866-780-7233. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
Do you think the market is going up or going down? Or is that even the right question to be asking? Here's a better question. When the market goes up, do you get to lock in your gains? What if you never had to worry about the market going up or down? Here's another question. Do you have a plan to never outlive your retirement money? What if the market crashes when you need to start using your money for retirement? Taking withdrawals from your retirement account can have devastating consequences due to sequential rate of return risk. If you don't know what that is, you should call us to find out. Brad's best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, and his Safe Money Kit can show you how to limit market risk and guarantee a lifetime of income. So pick up the phone and call us now at 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. On today's show, we've been talking about a landmark event that will take place in 2024. It's being called Peak 65. Now, what is Peak 65? It is estimated that more than 4 million people will turn 65 in 2024, and this will be the largest number of people turning 65 in any one year in our nation's history. As a result, many people are focused on their retirement accounts and whether or not they've saved enough money to last the rest of their lives. With this in mind, in 2023, my good friend Dr. Wade Pfau wrote a second edition to his best-selling book, The Retirement Planning Guidebook, Navigating the Important Decisions for Retirement Success. Dr. Wade Pfau has been a professor at the American College of Financial Services for more than a decade. He has his PhD, his CFA, and he was the head of the RICP program that Hunter and I both graduated from. This stands for the Retirement Income Certified Professional designation. Just listen to what America's IRA expert Ed Slott had to say about Dr. Pfau's book. Dr. Wade Pfau shows us why the concept of retirement is different for everyone. This definitive guidebook shows you how to recognize the strategies that will work best for you and your family. The anxiety that typically comes with making long-term financial choices will be replaced with confidence because virtually every possible retirement planning option is explored without bias. To me, that is critical. You will finally be able to take what you learn and apply it to your personal comfort level, whether that involves taking more risk, looking for more safety, or somewhere in between. This retirement planning masterpiece is the first step towards a successful retirement plan. Now, having read the book, I could not agree with my good friend Ed Slott more. And just listen to what's nestled right in the middle of this powerful book. Chapter 5 is titled Annuities and Risk Pooling. In this chapter, Dr. Pfau talks about the fundamental logic of annuities and how they create guaranteed lifetime income. He talks about various types of annuities and how to fit them into your retirement income plan. He even has an action plan at the end of the chapter that talks about how to select the right kind of annuities for you and your family and how to put them into place. In his action plan, one of his key points is this: work with someone who is familiar with the vast array of available annuities and who understands which will work better for different purposes, ages, and deferral periods. Friends, I couldn't agree more. This is exactly why I went to the expense and took the time to obtain my Certified Annuity Specialist designation through the Institute of Business and Finance many years ago. Less than 1% of all financial professionals who sell annuities have their Certified Annuity Specialist designation. So let me ask you a question. If you had to go in for surgery today, would you want to use the doctor who just passed his exam and had very little experience performing that type of surgery to operate on you? Or if given the choice, would you want the doctor who has performed more than 1,000 of those same surgeries operating on you? That's a no-brainer, right? You want the specialist who performs that surgery every single day to operate on you. If you were about to buy a product that was being sold by someone and you ask them, "Hey, do you own this?" To which they reply, "No, I don't own it, but it's great for you. You should own it." Why would you want to do that? Friends, the secret's out. Annuities are one of the only sources of guaranteed lifetime income that exist in this world. There is Social Security, there are pensions, and there are annuities. These three things are the bedrock of guaranteed income in retirement. And all of a sudden, everyone claims to be the person that you need to use to buy an annuity. Everyone wants to sell you one. But don't ever forget, I've been talking about the need for annuities and guaranteed lifetime income every single week for the past 14 years on Safe Money Radio. I personally own 6 annuities, and I have sold and structured more than 1,000 annuities for people all across the United States for the specific purpose of protecting their money and giving them guaranteed lifetime income. That's exactly why I have clients with their PhDs who reach out to me to help them with their retirement income plan. They want to work with someone who does this every single day. If someone wants you to buy an annuity from them, ask them if they own one. Ask them if they own the one that they're asking you to buy, and make them show it to you. Ask them how long they've been writing annuities, and ask them how many they've written. If they don't own one, if they just started selling them, and if they don't have any specialized education, run the other way. The Certified Annuity Specialist designation is the only financial designation that is focused on understanding annuities inside and out. You only get one chance at your retirement, friends, and you've got to get it right the first time. If you've been listening to the show or the podcast for any amount of time, you know that I'm a certified financial fiduciary. I am a retirement income certified professional through the American College of Financial Services, and I am a certified annuity specialist through the Institute of Business and Finance. There isn't anyone who knows annuities and how to structure guaranteed lifetime income for your family better than I do, and I can prove it. I've spent my entire financial planning career helping retirees and pre-retirees keep their money safe. There is a reason I was named one of the Springfield Business Journal's Trusted Advisors of the Year. I do what I say I'm going to do. I have helped people create guaranteed retirement income plans that pay them guaranteed lifetime income for the rest of their lives, no matter how long they live. And this can only happen when you insure your retirement against stock market losses and other types of accounts that fluctuate up and down like a roller coaster. The annuities that we use and the accounts that we use protect you from losses and fees. I talk about all of this in my national best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. If you would like to read a copy of this book, I'll give you a copy absolutely free. Just call us anytime at 866-780-SAFE. That's 866-780-7233. Just call in and schedule a free financial consultation. And when we meet, I'll give you a copy of my book and a copy of my Safe Money Kit that explains exactly how retirement income plans like this work. You'll find out why people like America's IRA expert Ed Slott and world-renowned economist Tom Hegna use accounts just like this for their own retirement income plans and for their families. Call us at 866-780-7233. Well, I'm about out of time, and I would like to thank you for listening to Safe Money Radio. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulation while reducing exposure to market losses. Thanks for listening, and until next time at the same time, I'm Brad Pistole, reminding you to stay safe so you can step into a secure future.
Safe Money Radio, your money safe and sound.
You've been listening to Safe Money Radio with your host, Brad Pistole. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Brad Pistole now for your complimentary Safe Money book and Safe Money information kit at 866-780-SAFE. That's 866-780-7233.
Safe Money Radio, your money safe and sound.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.